This is Bloomberg Businessweek with Massar and Tim Stenovec on Bloomberg Radio.
We're very lucky to have with us this afternoon a trio of CEOs. We're to our second right now, and it's the CEO of the enterprise cloud data management provider Informatica. The company reporting results on Wednesday. Investors and analysts, well, they really liked what they saw. Informatica boosted its adjusted operating profit guidance for the full year, the guidance beating the average analyst estimate. And Maddie, yesterday's shares surged to close more than 16% higher and continued higher today by another 1.6%. We've got the company's CEO, Amit Walia, joining us right now this afternoon. Good to have you with us, Amit. It's good to have you. It's good to talk to you again. It's been more than a year since we last connected. What worked out so well for you for the quarter, and what's your outlook for the year?
A pleasure to be on the show, Tim. Thanks for having me. Well, we had a great quarter and a great first half. Well, I think, look, we've been a company that has flipped to the cloud business model, all led by our platform, Intelligent Data Management Cloud. And what the analysts saw and they've been expecting is that we exceeded our expectations for growth on the top line. Our cloud ARR grew 37%. And obviously, in these transitions, people typically lose profitability. We actually exceeded our non-GAAP operating income and our unlevered free cash flow, and we raised the guidance for that for the year. So I think growth on the top line, boosting the bottom line, I think in a time like this, that's hard to do, and that's what our teams accomplished.
Well, that's the great news. I do want to read you from Citi's take on your earnings. They described the fundamentals as still underwhelming, with aggregate growth continuing to decelerate. But having said that, they do have a great outlook on the stock. So talk to me about how you would respond to that. What would you say about the fundamentals?
Well, thank you, Madison. Well, look, I think when you're going through a cloud business transition, that's why our investors focus on ARR. Revenue always takes a hit because of the whole accounting revenue recognition. And I think this year, our revenue from an accounting point of view has taken the hit because of obviously the cloud ratable recognition model. But the cloud business that's growing very well sets up very well for as we look forward, finishing this transition this year. So that's what it is. But it's smooths out when you look at ARR. It basically shows you that the intrinsic business grew very handsomely. When you look at the entire cloud industry, growing 37% was ahead of the market.
I mean, what are you hearing from customers right now? We talked earlier in our program about advertising companies seeing a pullback in advertising from some of the biggest tech firms. We've seen some of the biggest tech firms do a massive number of layoffs just this year. What are you hearing from your customers?
Well, I think, look, if you step back and look at the enterprise software market, customers are generally cautious. I think stock market is a different performer than how enterprise IT budgets are. I think people are thoughtfully spending. It's still a very cautious environment. There's deal velocity is still not as it was before. All of those things are happening. But what's happening in that is people are prioritizing their spend towards things that can be accretive to their top line or to their bottom line. And areas like data analytics, security, those are the things that move up the stack. And that's what I'm hearing. And of course, right now, Gen AI is there. Clearly, everybody's talking about it. And I think when I talk to enterprise customers, they are in the middle of, so where of all the things that I can do, how do I begin? Where do I begin? Which technologies do I bet on? And very worried about all the governance aspects of Gen AI. Those are some of the biggest things that I'm hearing from customers globally.
One thing that I can't stop thinking about too, and I can't wait to get your take on, is companies that are changing up their capital allocation when it comes to their IT spend to invest in AI so that they can ride the AI rally and wave here. I wonder what your take is on who should not be over investing in AI right now. Are there any types of firms, companies that you think shouldn't be over investing in AI and should stick to their typical IT spend?
Madison's a great question. I'll say AI or Gen AI in particular right now, tremendously overhyped in the short term, and I would say tremendously underestimated in the long term.
Well, so explain what you mean by that.
Well, I mean, like the hype cycle around that is so high that to the point that you were saying that people may walk into it with eyes closed because it's just a shiny object to go do something. And to me, the thoughtful way to do something about, first of all, it's going to be an inflection curve. It will help companies both increase productivity and increase intelligence driving the entire P&L. But you need to be thoughtful about it. Where do you spend? Which projects? Are they going to drive the revenue line or the bottom line? An example for that is we have our Clear GPT, our own Claire engine, which is part of our platform, the GPT version of that, where customers are in private preview working with it, where an insurance company is looking at the claims, fraudulent claims that they get. Can they increase the preciseness or efficiency of that from 88% to mid 90s? And that's a massive revenue boost. So I think companies have to figure out which use cases matter and don't just walk into it just because it's right now the shiny object.
You said that it's underestimated long term. When are we going to start to feel the power that AI has, in your view?
I think we'll see it in next year. I think enterprises are always a step or two behind consumers. All of us have used ChatGPT. My kids are using it. You and I are probably using it. It's very easy to do. It's the free data of the internet that we can access. But if I'm an enterprise, it's your data. Privacy, governance are huge issues around it, so on and so forth. I know our customers are playing with our product around GPT. You will see use cases next year where they will get tangible value out of it. But like anything, it'll take a curve. And I do think that the next 18 months are going to be very, very monumental. And I think they'll be fun because we will see value coming out of it.
How are you attracting and retaining talent just in the last 45 seconds that we have with you?
I think, look, always focus on innovating. Innovation attracts talent. We are blessed that in the world we live in, data analytics, it's the hot space to be. So, talent wants to work on those innovative projects, especially in the world of AI. There is no AI without data. So we've been benefiting by these trends that are benefiting our ability to hire good talent.
All right. I think we're going to have to leave it there. Really appreciate you taking the time this afternoon. Amit Walia, good to talk to you. Like I said, it's been over a year since we last spoke. Really appreciate you joining us and taking us through the numbers and also the outlook on AI for the remainder of the year. That's the CEO of Informatica, Amit Walia, joining us on this Friday afternoon.